Welcome to Deal Playbook, the show where we decode the real strategies of leverage behind scaling, acquiring, and exiting. I'm Tom Shipley, and after building and selling 16 companies, generating over $2 billion in sales, raising hundreds of millions in capital, and leading through chaos and opportunity, I've learned one thing. Success doesn't come from playing harder, it comes from playing smarter. Every episode, we will break down tactical frameworks, investor insights, and mindset shifts that move you from deal hunter to deal architect. This is your insider's guide to creating exponential growth and wealth through leverage, capital, and connection. Welcome to Deal Playbook. Let's get to work.
But then the other piece is personal readiness. It's not really market readiness, because if the market were ready, but I was dead inside and I felt like I couldn't give anything, and then I had an earnout and I wasn't going to hit it, likely it wouldn't be a good time for me to sell. If I was still really loving what I did and bullish, and I got an offer that maybe paid me, 5 or 6 times, and I felt like, no, I still have so much life to give. I don't know, no, it's not right for personal readiness. So it's really about, and often a lot of times, Tom, this is so interesting. Since I started learning from you, sometimes people come to me and want to sell, and I'm like, actually, maybe what you want to do is acquire. Maybe you just need a change up. And to me, that's what I see. So I think it's about personal readiness and financial readiness. Financial readiness is, okay, these were my targets. I think the market multiples are around this. I think I could get to the space that I want. That's first. But even if that works, if you're not personally ready, it can be a disaster.
Really excited. Here today with me is Carrie Kerpen, founder of the Whisper Group, just came out with a book, The Whisper Way. She is an incredible resource for people, and especially women, preparing to exit their business. She is one of the early founders of agencies specializing in social. We're going to talk about that. But there's a lot to talk about the women in your community, what you've gone through, your transitions. Really, really excited.
So first of all, thanks for having me on. I started together with my husband one of the first social media agencies. It was back in 2007 when there were no social media agencies. And we had a pretty epic run, grew really quickly, mostly because at the time it was so new. It's kind of like the way AI is now, right? It was like nobody knew what to do with it. And we grew. We started building, the Fortune 500 strategies for social media, very quickly became one of the top firms, and grew that from 2007 to 2013, grew it together with Dave, my partner. And then he left to launch a tech startup in social media. And I then decided that it was time to really grow this thing with exit in mind. I was very intentional about the growth, learned a lot about that process, and sold in 2021 to a tech partner. I knew that tech was becoming a really big part of what social media would be. Sold to a partner called 10 Pearls. And then in that moment, really recognized that just in general, exit planning is an area that's so underserved, and especially for women. And so I launched the Whisper Group. The Whisper Group is a collective of exited female founders, women who have actually gone through the process. I match those women with women who are looking to exit, specifically matching them in their verticals of expertise. So I would work with agency founders, for instance, and then helping them put the pieces together in place to get them ready to exit. And then not just exit, also, we help a lot of women-owned businesses acquire businesses, which is something that they often don't think is possible until they experience something like DealCon and really listen to a lot of your work. And that's been really incredible work too.
So we're going to dive in a little bit. We're going to go back to 2020. When did you actually decide 21's a year to sell? It's COVID. Was it before COVID? 20 or
21? I closed in April 21. So, okay. A few things went into play. My husband and I met every year and did a retreat on our lives. We would look at our lives, we would look at our assets, we would look at everything we were doing, and we would make major decisions about what was coming in the following year. When 2020 and when COVID hit as a social media agency, it was a very, very difficult time, especially because we were so rooted in culture and in-person community at the time. The agencies are all about that, right? Like you don't work for an agency because you like working like in a silo by yourself. It's like, it's communal, it's ideas, it's all of it. And so much of our essence was rooted in the in-person culture. So that was very difficult. But one of the things that was really beneficial to us was that people needed to navigate all of the eyeballs that were suddenly online all of the time. There was a lot of political unrest. There was a lot of like conversations. This was a time in 2020 where brands were expected to comment on what was happening in the world. You know, there's a lot of stuff like that. So we suddenly became advisors. We went from like creating cutesy content to all of a sudden having to have a commentary on issues across the world. That was really hard, but also important work. Like we were around the clock on commentary on social media, having to figure out how to create content, not in person, how to do it all. And we did, and we grew. But I felt that took a real toll on me personally as a leader, having to pivot to virtual. It didn't feel like really where my heart was anymore. And yet I still felt like I had so much to give. Like I felt like, oh, okay. I knew that when I was going to sell, I didn't want to sell when I was completely done and dead inside, because I knew that would be sort of a discount factor. I knew what a factor I would be. And so I wanted to be an accelerating factor, not a decelerating factor. And so I decided I still had life to give, but man, the world was changing and social media was changing, and maybe it was time. So we decided at the end of 2020 that we were going to sell. Now, Tom, we had no idea what 2021 was going to be. I mean, 2021 was the most insane year of exits ever. I mean, we decided we were going to sell in December. I think it was like early December, and we closed in April.
Wow, that was fast.
Had like
that was
6
fast.
LOIs. It was, I mean, partially it was because it was well run, but also it was just the time. It was nuts. And I couldn't have predicted that. People always ask me, did I time that in 21? It's just, the only thing I say about that is just, if you're ready at any moment, then you can capitalize on an opportunity. But I really don't think I intentionally did that in 21. I think I just felt like I had more to give. I could give in an earnout. And I knew that I was probably going to have to do one. So it was probably the right time.
So just double back on that concept. You know, you want to sell. Do you wait for the right moment to like, while the world changes and things are happening? Or do you, at what point you say, I should go to market and not wait for the moment?
So there's a few different areas, but I like to say you want to be financially ready. So you want to have an understanding of like, is the business going to sell at a good price right now? Is this going to work financially for me, for my family? Most business owners, 80% of their net worth is tied up, especially if it's their first business, tied up in their business. But then the other piece is personal readiness. It's not really market readiness, because if the market were ready, but I was dead inside and I felt like I couldn't give anything, and then I had an earnout and I wasn't going to hit it, likely it wouldn't be a good time for me to sell. If I was still really loving what I did and bullish, and I got an offer that maybe paid me, 5 or 6 times, and I felt like, no, I still have so much life to give. Like, I don't know, no, it's not right for personal readiness. So it's really about, and often a lot of times, Tom, this is so interesting. Since I started learning from you, sometimes people come to me and want to sell, and I'm like, actually, maybe what you want to do is acquire. Like maybe you just need a change up. And like, to me, that's what I see. So I think it's about personal readiness and financial readiness. Financial readiness is, okay, these were my targets. I think the market multiples are around this. I think I could get to the space that I want. That's first. But even if that works, if you're not personally ready, it can be a disaster. You have to
100%.
really be personally ready.
Did you use a broker?
I did. I partnered at the time. So it's very interesting. And I've learned so much about this now. I'm very happy with my outcome and with who I chose at the time. So at the time, merge was Barney, and they had not done a deal of our size. We were the largest deal that they had done, but she was a female founder. Yeah, she was a female founder, and she was building something beautiful. And I knew she would like work her tush off for me, and she did. And like for me, it worked. I do know people who were my size who used an investment banker who were able to, I think, extract the value that an investment banker might bring. And I also know people my size who facilitated their own exits and did very well. So I think like it really just depends on the right fit. But you did use an advisor, like in between early stage broker and investment banker.
So someone comes to you and say, Carrie, should I do it on my own or should I use an investment banker?
Depends on size. Investment banker is going to be very expensive and you have to see the value that they can add for you. I think that no matter what, you should talk to people no matter what. But I think the most important thing is to know the acquirers in your space and form relationships with them early and often. Because if you form those relationships, you can sort of chart your own path pretty early. Then you're just hiring someone to help you get it across the finish line and help you negotiate. But like if you have those relationships early, you get a level, often a carve out. You say, hey, I know this person, something like that. I think, form relationships with acquirers early and often.
I agree. I believe in using investment bankers. Not all investment bankers are the same. There is a massive difference between, I'm going to steal a little bit from your book, which is the narrative and the storytelling. And are really good at storytelling. And those that are just procedural, they have their list, they put out their deck, and sometimes they don't follow through great. Sometimes they do. Sometimes I'm doing all the work they're doing, which is very frustrating because they're supposed to be professional. And I've used great ones and I've used extremely mediocre ones. And it's really, really different. So what is the most important things I need to think about to get ready to sell my business? And what are the biggest factors that takes it from a straight financial transaction to something transformational?
So when we talk about Whisper, there are 7 tenets, I think, that help you get ready for exit and build a highly sellable business. And Whisper is an acronym that stands for the 7. So the first is really important, even though it seems so simple. It's understanding why you want to exit, where you want to go, what the type of exit would be like, and what's the sort of reasoning behind it, because that's going to help you go between just going with a financial acquirer or potentially a strategic. If you know what you want that business to do, it makes a big, big difference, and what you want your role to be and what you want that experience to be like. The how is understanding the market multiples and then looking at what the drivers are and really getting to a space where you feel educated coming into this. I was only moderately educated. Like I had read Built to Sell and a couple things like that, but there's like so much more that you can learn. And then there's the factors, and the factors would be your income. So making sure, I always talk about having income be recurring, something that's repeatable. It's expected in that you can forecast it really well, and it's diversified. It's not like based on one client or customer. The acquirers are inherently lazy. They don't want usually to buy a fixer-upper to the point where they want to be able to count on the revenue. Like that's going to be first. Like they might be able to fix your profit. They might be able to change the narrative, but they need to know that they're buying a base of business that's there. And so you want your income you have to be able to easily forecast it, have it be diversified, and ideally, if not recurring, then repeating, right? And especially in case I know you do a lot of work there. And so that's income. Secret sauce is your narrative and really figuring out what makes you different, and not just what makes you different, but what takes you from a financial sale to like more of a strategic is selling the vision of how they fit in, how you as an organization fit in with the acquirer. And that narrative is different for different acquirers. So really understanding how you can be additive in a way that it goes beyond the revenue. What helps them, what efficiencies, what strategic initiatives, how does it work so that this can go, from 1 + 1 = 2 to 1 + 1 = 10. It's really an important piece. Okay, so it's your.
Before you go further, I don't want you to forget the acronyms for Whisper. So I'm interviewing investment bankers, and I want to see how do I interview and gauge whether they're going to get the whole concept of story, because a lot of times they're lazy and they say, it's a package and here's the history and here's the people that are in the business, and just tell that story of who they are now, the story and the vision. So how do you interview for that with an investment banker?
I know very quickly if someone gets my business, loves my business, and is interested in my business. You see, an investment banker is going to show me, okay, look, here are the transactions in your space. Here's where we got them. Here are the potential buyers. All of this is very valuable, but understanding like who you are and why you're so valuable, that's the thing. I don't love being a small fish in a big pond, because I don't think that that's why I don't like huge investment bankers a lot of the times, because you're just like, plug and play, let's go. Okay. I want somebody who really, really understands the value of, who I am and why I'm additive. And that to me, it's like I think I have a post somewhere about this. It's like when you're picking an investment banker, you want somebody with experience in your vertical. You want somebody with connection to buyers because that's very important. That's why we're hiring them. Because otherwise it's like, what's the point, right? You want experience in the vertical, you want a good connection to buyers, and you want somebody who gets you and gets it, because this is a huge deal. And so and for me, that's what I hired for. That is what I hired for. She had experience in the vertical, although smaller. She had a good connection to buyers, and she understood me, and she understood the business. She understood why that business was so valuable. And it's like, it's really hard because it's your baby. You're going to understand why that business is valuable. And it's not that you don't want somebody who's not going to look at your baby critically. You do, because you want to improve it to be ready to get to exit. But you also want somebody who gets it and believes in it and is going to fight for it. That's what you got to test for. And that's just feel. That's just feel.
And really understand who in the firm is going to be working with you, representing at the pitches. I had a situation that I had an investment banker who was extremely busy with a lot of big deals. And therefore he basically had his college intern was the one sitting in the presentation. Again, they were a big firm, but the college intern was sitting in the presentation, basically running the projector. And actually she fell asleep during one of the presentations, one of the private equity firms. It was like, I was livid. Just so understanding is how much are they actually involved with the process, and who is actually going to be there all the step along the way, and really, and they carry the narrative, because the senior partner that you met with, if they're not in the room, they're not carrying the narrative.
I think, that's a really, really important piece when you're picking someone. So you've got your why, your how, your income, your secret sauce, your profit. Most companies, and certainly services-based businesses, are valued off of EBITDA. And it's going to be very, very important to get an understanding of your profit, to optimize your profit, to focus on it, and make sure that you have a model that shows that there is a good profitable win. It shows the profit that you can maintain based off of every piece of income you add will yield X amount of profit. And then there's the executive team who's going to be doing the work once they acquire. Again, super lazy. They do not want to come in and like reinvent. They want it to be easy acquisition. You want to show that, like, here, this is plug and play. We've got the right team. We're going to plug the holes, et cetera. And then the last piece is just your roar factor or your resilience, like how you're going to go through this process, which is really, really challenging. And are you really, really ready for it? And so that's really about personal readiness, making sure that you're in a space where you're ready. So it's sort of like the why and the roar come full circle. So it's all
okay.
piece.
So how do you handle it with, basically, you are a founder of this business, and it could be an agency. You're a founder of this business and you're going to sell. So basically, a lot of the story is about me. But if you want to leave the business at a certain point of time, you have to make it about the business, basically the story about the business and the team. But part of it is your secret sauce. So how do you actually, when you're advising sellers, how do you recommend them balance that or be cognizant of that?
Must reduce founder dependence and have a team. If you can show that you don't work on, let's say it's an agency, you can show that you don't work on those clients. You can show that, it's really all handled by a team. You're going to be in much better shape. Acquirers are also not stupid. They might be lazy, but they're not stupid. They know that when you do an acquisition, unless you're going into something, you're offering a founder equity in something bigger, and it's, really something big and exciting that that they want to do. Most founders aren't selling because they're really interested in being an employee. Like, they're just not. And so my answer to that is always like, make sure that your business can run without you, and make sure that you can be like, I always like to say, like, as a founder, I was the glitter, and people want glitter. They want sparkle, but the glitter is not essential to the business. The business operates on its bones, right? But glitter is like a shine, and you want that, especially if you're looking at an agency acquisition, right? You're looking at bringing on talent, you're looking at that. And if you are what I would say on advice for this, for people who are acquiring, is, let's say you have a agency that's grown because of, really strong founders. Most agencies and groups that they grow because you have the grit and the heart and the push of a founder, and they can hopefully get it up to where other people are doing the work, but they're still like very valuable. And if you want that founder to be a part of it, incentivize them early and often to be a part of your broader organization. I think that's really, really important. Otherwise, assume that they're going to leave at the end of their tenure.
100%. How did it feel to be an employee after your transaction?
I had a good acquirer. I mean, my acquirer, this is interesting. Like, I really operated pretty independently, and he was I was acquired by another privately held company, super, super respectful of our business and our process, which was great, good and bad, right? Like, I was able to maintain autonomy because I operated it as a separate division, and that was good. So in some ways, I didn't feel like an employee, but in other ways, because I was operating autonomously, I felt like I was sort of on my own, but also an employee and reporting up to somebody. And that was really challenging. I think the acquirer was awesome and gave me like a lot of rein to do what I needed. But I think it's really, really hard when you have to report into somebody for the first time. I think I could have been good at it if I were like officially like brought in as a partner, that type of thing. Maybe. I don't know. I think I'm alone. I think like once an entrepreneur, it's really hard to work for somebody. And I think
It sure is. And
did you ever do
found
it
it?
successfully, Tom? Did you ever do it
Right.
successfully? Did you work for somebody successfully ever?
No,
I
no,
think it's really
no,
hard.
no,
So it's
no.
not to
Not
make that really like I like to trick myself to think I would be good because like I'm such a team player, but I don't think I would be good. I think I'm a lone wolf. I think I'm an entrepreneur through and through.
So what's really interesting is that there are different ways to exit a business, correct?
Yes.
Define exit. All right. You can, yeah. So one that I'm just intrigued with is, therefore, at DealCon, we brought in several people. They exited to a private equity firm, but they were the platform. They are the platform, but it's really interesting is that if you're the platform now, in certain ways, you are running your business, you're running independently, and depending on your right part. But on the other hand is you have a boss for the first time. You are accountable. You have to have, you hitting your numbers are important. Showing you're growing and scaling. It's not based on what you kind of show that you are growing at the rate you're growing at. There are discussions and hard discussions that are going to happen along the way. So that's difficult for a lot of founders.
It's very difficult. I mean, I think being the anchor on a PE deal like that is ideal, right? If you're like, how great is that? Okay, somebody's going to infuse cash into you. You're going to be the head company and you're going to acquire other companies like you. Sounds like a dream. However, there are a lot of parameters that you might not have expected. For instance, everything like when you are a founder and you say, okay, we're going to grow, we're going to hit 20 million. And you hit 19, you could be like, yay, we hit 19. It's great. Like, because you're privately held, like, it's just you. What are you going to do? Okay. You'll make a little less. You'll hire a few less people, like whatever. It's still awesome. If you are bought by a PE and you're invested, like you got to hit 20. So like, it's not like it's, and the other thing is you make decisions when you hit 19 instead of 20 about how you allocate the capital and what you invest in and what your margins are. When you're a part of a company like that, they're going to have a lot of say on those decisions. And suddenly optimizing for profitability is no longer just to make you money, right? It's like when you're running a business yourself, you're optimizing for profit, it benefits you. It's like, feels like a mandate. And entrepreneurs don't like to be controlled. So you have to realize that piece is there. I think it really depends on the firm. Like if you find a good PE firm that really like supports founders and does that could be a dream. It's really
can be if you understand how to work with them parameters and you find the right one that allows you to have the autonomy. And something's funny. It doesn't just depend on factors of like when you're bought by private equity. And for example, is that even when you're bringing in debt for growth, I brought that in my business. My first mezzanine lender within 60 days of our first acquisition, one of our lead vendors that had our credit card or phone numbers and fulfillment went back, shut down. We couldn't access. We get our phone calls coming in. And so then we called our mezzanine lender and we picked them because they were mature, seasoned. And John said, you got a plan? We said, yes. He said, call me in 2 weeks and give me a status update. And that was it. And he was fantastic. And because he had trusted us and we delivered. And that was Atlantic Coast Brands. And again, he helped us go from $331,000 in revenue to buying a $15 million company. And within 3 years, we got to $100 million. But he trusted and believed in us. I've been in another situation with other lenders where they suddenly inserted themselves, pulled the reins back out of concern. They jacked up the interest rate to default rates because you missed a covenant because you're going through challenges. So I've been on both sides, and the partners And same thing with private equity. If you're selling to them, there are those people that want to control everything, including I want to change my logo, and they want to get involved with it. And those that say, grow, what do you need? Here's our team. How can we help you do acquisitions? What can we do together? Let's have some fun within constraints and responsibility. But that's really, really, really key. Let me ask you this is, as you're talking and you're looking at the landscape, well, I'm going to start with female founders. For someone doing acquisition, I don't want to generalize. Is there any difference between buying a business that was run as an acquirer, buying a female-led and owned business in general? There are exceptions versus a male. Is there any difference whatsoever? A male founder versus a female founder?
No, Tom, that's a great question. I don't know that anyone's worded that way for me before. So I talk about this a lot. Like, a good business is a good business. You're looking at the financials and their performance. I think generally, when I talk about like the exit gap and I talk about female founders, when I speak about that, it's mostly about that women have not been placed in rooms or have not gotten to the space where understanding the nuances of acquisition is even possible. Like, this is newer for many female founders. But on the buy side, I think there's a unique benefit actually to buying these types of companies. First of all, you have a leader who usually data will show that when you have diverse founders, they're going to hire other people in management positions that also are female or, anything along those lines. And that brings you a strong and different perspective. I think they are fantastic leaders. Data shows that women who often operate more profitably, often because they are risk averse and they have less options. They don't raise as much capital. They've typically focused on a strong operational foundation. Again, these are some of the data points that you can find when you look at the stats around women-owned businesses. And so I think that there is a benefit in that you are more likely to find a business that is run really well, healthily, and has a really good team, because that's where a lot of our focus is. You won't find businesses that have had as much capital infusion, which as an acquirer could be great in terms of the ability to get a good deal and have the founder come out with a win. Because once you take in capital, it's much harder to have the windfall that you might if you were bootstrapped. So I think it's an opportunity for a win-win for everyone. So that's how I would answer that question. I've never been asked that. I love it.
My experience, and again, I don't want to put everything in a box, is that there's certain communication skills that women have that are better than men.
Yep.
There's certain collaboration skills and friendships and openness. And that's just it might be changing our society, but that's the way it's been for years. Therefore, bringing a women-owned agency, my experience is more openness, more readiness, more willingness to be supportive, more really care around the team. And so that's been great. The other thing that I found, and there is a lot of data on this for startups, as far as the difference between when female founders are going out raising capital for their startup versus male founders. If you look at, and what I've been shared some of the data is, if you look at majority of male-owned businesses, the growth rate they're showing is typically double the growth rate that the female founders are showing. And the reality is a lot of times the women will exceed those numbers. And if you put too high of numbers, the men end up short. And therefore it underperform versus overperform, and it burns out the team. It creates dissonance or conflict with the people that actually funding the transaction. And therefore having realistic projections. I think there was one investment banker who spoke at DealCon who was sharing that the one thing he fights a lot with the sellers is, even though you think you can hit a 30% year-over-year growth rate, you never put that in your projections. You're not going to get a dime more for doing it. He said basically is put it at 10 to 15%. If you're going to think you're going to double that, be conservative. And what's going to happen, they're going to say to you, wait, you're saying you're slowing down the growth. You've been growing by 30% every year. They said, yes, we always put our projections at that lower and we always exceed it like we're doing this year, but this is our forecast. The only thing if you go too aggressive, the only thing you're going to do is you're going to be slapped for not hitting it, or people put your earnouts goals based on the higher numbers. Is that what you found?
Correct. And there's a lack of trust in the founder. They know, founders are smart. They smell bullshit. There's no question. So I think if you're looking at, by the way, the data, what you said about women and their projections. That is so dead on, not even just for entrepreneurs. There's a really great book on this that has tons of data. It's called The Confidence Code. It's by Carrie and Claire Shipman. They talk about even with job applications, men apply for jobs when they meet like 60% of the criteria. And that's actually appropriate. That's good. Women don't apply unless they meet like 95%. So it's the same thing when you go like and you fundraise and you're doing your projections. Women are going to be almost like conservative about where they're going to go, typically, where men will be, really pie in the sky optimist. And the reality lies somewhere in the middle. I wish we all landed somewhere a little more.
So let me ask you this. I'm going back to your agency, especially early years, and were you expecting it somewhere there was a shift? If you were talking to yourself, let's go back to 2018, 2019, what advice would you be giving yourself back then based on what you know now?
Acquire businesses stat. Acquire. I had no risk tolerance, Tom. I had no idea the gem. I didn't know how well run we were. I didn't know how great our culture was. Like I thought it, but I didn't have outside experience to really know this. Like, of course I should have acquired businesses. Of course. And I would have grown so much more. And then maybe I would have sold either later or for a higher multiple or anything else. I mean, I sold at the top of the market, but I could have increased my revenue and EBITDA by so much. Like acquire. And also it's fun. It's fun. That's what I just did this acquisition. We just announced just the other day about this woman who acquired this, a small marketing company that focuses in plastics. They are having so much fun and it is working for both of them. It's like a happy, healthy exit for all, and it will make you more money in the end. Acquire. That would be my learning. Yes.
It's for, there's so many rules there. First of all, the rule of 12x. If you want to 12x your exit, very simply buy one business that's half your size every year for 5 years, you'll 12x your exits. Okay.
Yeah.
So again, you can go do larger, you can do smaller, but that's just general numbers as far as overall goals. The other thing is that the other stat that if you decide to launch a new division or a new product, if at Atlantic Coast Brands, from starting a new brand, if we had a 30%, 1/3 success rate, that's phenomenal. That would get to significant scale and be meaningful for our business. Acquisition success rate typically are in the 80% range. So again, and what you're doing is you're adding significant EBITDA and momentum to your organizations and capability to your organization. And if you do it with the right attitude, it's fun and it gives such life and energy to your business like this.
It does.
So
it does.
It's that momentum.
Yes. And just being
go on.
It's just being really thoughtful about it too and focusing on the integration, like picking the right fits and that kind of stuff. It's like so key. I think about this all the time. I think about this with the Whisper Group and if I potentially do acquisitions, like it's finding that right fit. Really important.
People forget is that acquisitions are just about following processes and having EQ and IQ and following the processes. And that's 50%. The other 50% is all there during your acquisition process. You are informing yourself and putting together your integration plan, because that's when the real excitement and fun starts. If you do it the right way and are thoughtful as far as what happens on day one. And so that's a conversation for a different day. Let's just pivot for a second and talk to me about what you're dealing with so many agency founders.
Yes.
What do you envision that's I'm going to say that there's certain industries that can be more disruptive than others by AI. So what are you thinking about the future of AI on agencies?
I love AI for agencies. I have no fear. I am a different bird. I don't know. I come at this from a space of complete abundance. AI is going to make agencies, several things are going to happen. Number one, it's going to make agencies faster, but it's also going to have a real resurgence back to top level smart people. You see, AI is only as good as the people who are feeding it the information. And AI, as a term, AI is going to make us infinitely faster. But the people that on the agency side that are going to be forming the relationships, leading the charge, and feeding those prompts are going to be key. Like people talk about jobs going away, and yes, they will. There will definitely be a market compression, especially for younger and early stage folks. Yes, there will be, but there's also going to be an entirely new industry of prompt engineering. Like this is what happened exactly when we were starting with social media. Everybody was absolutely terrified about social media. Social media is going to kill the ad industry. Social media is going to, if you just lean in and learn how to surf it, you're like going to be in a great space. And I think you're going to see a lot of things happen here. One, the M&A market is going to boom because you're going to have a lot of people who are scared of AI and don't know how to do it. Okay.
Mm-hmm.
A lot of sellers that are ready to get out. You're going to have smart buyers that are not afraid, that are like, okay, I'm going to take this revenue. I'm going to figure out how to utilize AI to my advantage, but keep that agency model, be smarter, leaner, better, and benefit. You're going to have people really surge. And then you're also going to see on the bad side, people like WPP and all of these huge holdings who are so bloated and are public and have no idea what to do with themselves. That's going to be the place where we see suffering. You are going to see a rise of smart independents that are going to acquire some of these smaller groups and figure out AI in a way that is so beneficial. I will never forget being at DealCon. I think it was you who said it. I think you are either a tech company with AI, you are either AI enabled, like figuring out how to use AI, or sell right now. And I was like, that's exactly it. That's exactly it. The agencies that win will figure out how to be AI enabled, but not entirely AI. And then if they're entirely AI, then they're tech. And then agencies that aren't and don't want to figure it out, they should sell right now because there's a lot of opportunity to do so.
Yep. Agree 100% on that. This is a very big transformational year. The other thing that acquisitions do is it gives you the scale and the margin to invest even heavier in AI. And it's this reinforcing loop versus those that are very boutique and small and just don't have any budget because they're too small and they won't invest in AI, then it's a negative reinforcing loop. So to me, acquisitions and AI go together, and it's this the magic formula. And if there are those people that are not leaning in, that are afraid to move, that are afraid to be, I don't want to call it aggressive, but really take the momentum and just create the momentum and move, those companies are going to be dead in the water. If you're sitting there and if you're not doing acquisitions and you're not implementing AI and you're just stuck and you're trying to do things the same way, you can't compete. Your competitors are doing it. And therefore you can try to ride it out, but basically your business becomes less valuable every day. And the asset that you built over the last 5, 10, 15, 20, 30 years.
And the area that's going to really boom on agencies, I think if they can figure it out, is like, it's a short window, but you got to go right now, is like the AI consultancies, which is how to bring this and infuse this into everyone. Large companies, small businesses, people don't know how. And so that was the thing. Like when we launched Likeable, people had no idea how to use social media. Dave wrote a book, was an instant New York Times bestseller, Likeable Social Media. Here's how to do it. And then we did it for brands. And that to me, when I see companies that can truly consult on how, because everybody knows they need to use AI. It's like saying you need to use the internet. Like they know. Right. And so it's just how. And companies and services businesses that can help you figure out how and can actually have humans that hold your hand through it, those are going to be very quick, immediate wins.
So I'm going to pivot for a second because I agree with that so much. We're actually dedicating a half a day on our final day just to AI integration, AI implementation. I want to see if I can get an expert in there to also help share is how do you pick an AI consultant or vendor? So again, because AI implementation and AI optimization agency are popping up everywhere. They're not the same. How do you actually, it's like early days of the internet from web design, social media, just because someone put in a hat and said that they're great at it and they're overcharging doesn't mean that they're going to have the same impact to your business. Picking the right one 100%. Is critical.
The same way there's a great opportunity to succeed here, there's a lot of opportunity for a bunch of charlatans to come in and say, oh, I'm an AI consultant and da-da-da. You have to be very careful and look at case studies and talk to references and all of that. 100%. It's a wild, wild west right now.
It is. And I hear a lot of people advising people is you don't just go out, get the accounts, and then go back at night and ask ChatGPT what you're supposed to do the next day. And every day ask it. And then your AI platforms will tell you how to do this. And you do enough businesses, you'll get the skills doing it. Now, for someone starting a new business, good advice for them. But for someone who is actually utilizing services, it's not what I want. I don't want someone to experiment off my business, period.
That's right. That's right. But a lot is experimental right now. And so what you need is somebody who you can trust that has the knowledge, that has done this for other companies, that can show like actually what they've built and how they've done it. Like if I'm looking at an AI group, I want to see how they utilized AI to reduce costs, improve time, like show me all the KPIs that are associated with it. And that's what I would look for. That's going to be so great at DealCon. I can't wait for it. That's awesome.
So let's just talk about for a second. We had the most exciting thing happen at last DealCon, and it was I met Carrie, and it was like, wow, let's do something fun. And we said we end up coming up with the idea that you actually brought in several women founders that were exploring strategic opportunities. Whether they wanted to sell immediately or sell 2 years from now, it was exploring strategic opportunities. What are the options for them? We brought them on the stage and you interviewed them. We got some great insights, and there was also some great opportunities for people there to say, let's partner together, let's work, let's merge, let's acquire. So there's some really interesting things. And then I'm so excited. Can you talk about what your thoughts are and what we're doing?
Yes, but I also want to tell you, I just thought of this, how interesting the impact of that session was. We interviewed 3 different companies on stage about who are interested in exploring, different things. One just sold. One actually ended up acquiring changed entire thought process, ended up acquiring in order to build to sell. And one decided to go it on their own. And so it just shows the variance of the mindsets of founders. And we had 3 amazing women up there with 3 different results, and all of them make them happy, which is so incredible to me. In terms of next session, I mean, we're really, really excited for DealCon. And for me, the goal was to really do 2 things. One, it was on the audience side, it was to get female founders thinking about the art of acquisition versus just, oh my gosh, get me out. I'm scared, really into okay, let's lean in and grow. The second was really to allow female founders, which was on stage, to get comfortable saying, I'm interested in exploring all of this. When I first started, Tom, it was really scary for them to even say oh, I'm thinking about a sale. Cause what does that mean? Does that mean they're done? Oh my gosh, it's so scary. And it's really getting people comfortable to say hey, yeah, I'm open. I'm open to anything. Showing the different, I think what it does is it allows people in the audience to see founders who are open and what their actual mindset is. Because so much of what win on an acquisition, you are not always going to win on paying the highest price. And hopefully you don't want to win on paying the highest price. You want to win on understanding that founder and their mindset and what they want to do with this thing and where they want to go. And so for me, it's so great to provide that insight to the audience.
I'm really excited about that. And it's interesting is we typically get about 10% of the room that walk in as they're sellers thinking they're going to be buyers. But what I've learned over time is every buyer is a seller and every seller is a buyer.
Straight.
And it changes over time, and therefore coming in with an open mindset and a growth mindset. And that's what I'm excited for us to do. There's something about people always think that the person they're talking to is thinking the exact same way that you are, which is completely the opposite. And therefore it's enabled me to buy businesses with, again, I paid premium, the first acquisition I did or second acquisition I did with 85% cash at close for that brand. Yeah. And it basically changed everything for me. On the other hand, I've also bought businesses where a couple of businesses at 5% cash at close, and mostly all seller notes, because we had a vision on what we can do with their business, and they were looking for something different. Could have been they want to be on the beach scuba diving and they just wanted a good place for their clients and their team. It could be that they basically were tired after 20 years and they just want to be part of a really good organization, and they were scared of selling to certain companies, which they felt that nervous. Certain organizations aren't very open and warm, and basically it's part of your selling story. You want to buy, and that collaboration, as you said, is getting the right seller and the right buyer together always. And it's not about price and it's not about terms. You can always typically find that Venn diagram of perfection. Anyways, final words of advice or insights you want to give to everyone listening. And by the way, and I forgot to mention, What percent of business owners or agency owners are women?
Well, percent of agency owners really varies. Women right now are opening businesses at twice the rate of the population. Agency owners typically on the creative agency space are almost always male. On the PR space, you get a lot of women. It's sort of a mix, but it's predominantly male-owned businesses, agencies, with the exception of PR.
Right. And so it's a very, very high percent. And therefore, because with your help, I was so proud that we had close to 30% of the room were women owners at the last DealCon, which changed the dynamics. And I love that. And we're going to push for that or a higher percent this year at this next one in September 8th through 10th. Final words of advice for anyone that is owning a business and are exploring options of acquisitions or selling. What would you say?
Step one is focus on building a healthy business. Make sure that your business is in a state of health. You have good revenue that is diversified, that is expected. You have good business fundamentals, you have good culture, and you're able to show that you're profitable. Once you have that, you can do anything. You can use that profit to acquire, you can sell, all the options are available to you when you start with building a strong foundation.
Thank you for tuning into Deal Playbook. If today's episode sparked an idea or gave you an edge, share it, subscribe, or leave a review. Remember, opportunity doesn't wait, it's created. Until next time, keep building, keep scaling, and keep playing to win.